But all of that sort of gets overshadowed by this STT hike on futures. Because did we really need it? How much money are you going to make out of it? And what it's done to the sentiment.
Yeah, and the timing thereof, nothing on LTCG. I mean, had they countered it with a little bit of LTCG, who knows, it might have been okay. CapEx 12.2 lakh crores on the revised estimates. I think the number might still look okay, so that is probably one good thing. And some individual line items, some data centers, buyback tax, textiles, etc. But nothing dramatic, nothing out of the ordinary.
Semiconductors good, rare earth good, minerals good, but now what will they actually do? Let's wait and see that. I'm going to actually start from this side and start with Nilesh. Nilesh was watching the budget with us, and all of the reactions when that STT came in. That was maybe something that the market's not going to like.
Yeah, absolutely. That's going to impact the sentiment for the near term for sure. I think there'll be concerns if that will lead to any drop in volumes as well, because liquidity is extremely important for the markets as well. So I think clearly that will surely impact the near-term sentiment in the market. But obviously there are many other positives to do with infrastructure, the focus on textiles, focus on semiconductors, rare earth minerals. So I'd probably say that in the short term it will impact market sentiment, but lots of things in store for the medium to long term. Okay,
the one big positive from your end, Nilesh?
I think clearly the focus on infrastructure, the fact that the spending on infrastructure has been taken up to 12.2 lakh crore, the talk of more high-speed rail corridors, the focus on waterways. I think these are some of the big positives out there. So to me, I think the biggest positive here is the continued focus on infrastructure.
Okay, are we finding more positives than negatives, Manish, or is it a sea of status quo and then this one thing on STT which is telling you that the government wants to really dissuade people from engaging in futures trade?
So bad for equity, bad for bond markets, sovereign bonds. The expected borrowing was somewhat less than what it turned out to be. Hopefully there is a swap which would be there in the fine print. If it's not there, then bonds will blow up by 10-15 basis points further on tomorrow. Good news for credit markets, that the trade receivables are now considered as ABS. Total return swap will be now allowed, and which perhaps would enrich the sort of deepening of the credit markets could really happen. So lots of nuts and bolts things. As we discussed in the morning, that no big bang. I don't think the government has to please equity markets right now. In fact, that they've done reasonably well. This is kind of a small little things here and there. As we said, they're letting the paint dry.
That's a non-equity market person talking, I can tell you that. Okay, just by the way, PSU banks have tumbled as well, because the expectation was that there'll be an increase in some maybe FI limit or value unlocking. That hasn't happened, and you're seeing that correcting come in the PSU banks as well. But Manish raised a point, and which I want to come to both Mihir and Pankaj with, that there is some stuff done for the bond markets, not as much for the equity markets. You were very vocal, Pankaj, about the bond thing. Manish raised this point as well. If the fine print doesn't have that swap that Manish was talking about, what do you make of the borrowing number, which is fairly high?
No, I still think the net borrowings are very much, in place kind of a thing. So I'll not be ruffled by 50,000 crore here and there. We need to understand, you need to give some leeway or flexibility to a finance minister who's running this country. You cannot pigeonhole her to a number to the second decimal. So I think broadly the numbers are very much in place.
But the expectation was 16 lakh. The gross is 17.2. So it's not actually 20-30,000 crores. It's much higher.
Yeah, but given the context, meaning I think as long as she has maintained the fiscal deficit, that's fine. How she finances is a matter of overall aggregate funding or cash flow, but your overall aggregate deficit number is pretty much in shape. So, and given the fact that she is having an overflow of small savings, the market borrowing number has not changed significantly.
Okay, so how that math has actually been arrived at, I think will remain to be seen, because you have that increase in gross borrowings, but the fiscal deficit target is good. One big positive and one, okay, you don't want to say big negative, Mihir, but at least one not so positive.
The STT increase was obviously a bit of a irritant, I would say. Given the little bit of fragile sentiment in the market, that was maybe avoidable. I don't know what the tax collection will be by increasing the STT number, but
seems
definitely
more like a preventive rather than a more attempt to put a lid on that kind of trade rather than get some great revenue out of it.
You want to do that when the markets are in a positive sentiment, in a positive mood. You don't want to do it when the markets are already fragile. We've seen the currency weakness, we've seen FIs continue to sell. In that, a little bit of sentiment plus minus can impact, in the short term. But I'd say that overall, if you look at the capex focus that continues, we need to see how much the defense number is in terms of capex, defense, railways, the sub-segments. Those details have to be worked out. But broadly, I'd say it's not much of an impact for the markets.
I just want to add on to that whole thing. India is the market now which has the highest ratio of derivatives trading versus cash market. Okay, there is SEBI document out there which says 97% of retail traders lose money. So to disincentivize or reduce the speculative element in the market, I don't think so. I think it's a very reasonable disincentive because we need more investors than traders in this country.
No, but then why not LTCG? Then if you need more investments, okay, Shanti ma'am, very quickly.
So I think we did not expect too much from the budget, and it is exactly that. There is very little to see. I think the only big positive is the commitment to fiscal prudence and the fact that, of course, the devil is in the details and the small print. But if they stick to 4.37, which is marginally lower than this year, which is what we said, I think that's good. Within that, the emphasis on capex is good. It's marginally higher. It's about 1 lakh higher, and the borrowings are also 1 lakh higher, so we will correlate to that. But I think the fact that they did not bring out LTCG was still okay, but the blow on STT, I think markets were already down. And it's just a sentiment negative from a trading and a volume perspective, albeit 16. So I think the finance minister did not have too much room and did not have too much room. I was surprised by no additional allocation to defense. I was surprised by nothing on LTCG. Of course, there's a tax holiday on export of cloud services from local data centers, which is good. There was a lot of talk on parity on deposits versus mutual fund, given the challenge to the banking system on the saver to the investor move, and was expected to have not the full way parity, but some parity. No parity on that account. So I think the only positive is the fiscal deficit prudence.
So, Nilesh, coming on this now, what do the markets look forward to, right? I mean, Tamanna mentioned this, right? In some sense, no big negatives, yes, except for STT. But a lot of things haven't been said. Nothing on disinvestment, nothing on defense, which came about, which was very much anticipated, plus this STT. What does the market look forward to now?
No, I think it's going to be now business as usual. You go back to fundamentals, you go back to earnings, how individual companies will shape up, and then, of course, valuation. So I think it's going to be pretty much a business as usual mode from, say, maybe tomorrow onwards, that you will have to now look at individual companies, how they are doing, earnings, valuations. I think you go back to basics. That's about it. There's really nothing, no new big theme emerging out of this, which you want you to kind of say, okay, reallocate. I think the big comfort which the markets get is, again, on the infrastructure side. There was murmur that maybe the spending on infrastructure will not kind of go up. But that's really the big saving grace, that the spending on infrastructure continues. The second thing is essentially that risk management fund. I think there was some talk of a 25,000 crore fund for infrastructure.
Yeah.
On a 12 lakh crore spending, 25,000 crores is 2%. That's kind of a lot. I think that's going to give a lot of comfort, a lot of solace to banks and lenders to go ahead and lend to infrastructure projects, and the multiplier effect on that. So that, to me, is honestly the biggest positive of this budget.